September the 11th. Markets ended lower yesterday. A lot of investors and traders booking some profits on some games from last week, especially from Thursday and Friday. We really ended up flat, slightly negative for the majority of the session. Then we had some little bit of selling activity come in the last couple hours. And I just feel it's basically we have a big German constitutional ruling on Wednesday. And then, of course, the biggest weight of all is the Fed announcement about QE3 and when are they going to act on the QE3? Is it going to be right away? Is it going to be announced at a later date? And if that's the case, then I think the markets will sell off from there. We did have a small sell-off yesterday, no big deal. But it is the first day back of a full week, and really the only holiday we have looking forward is Thanksgiving. So we're back to the markets, and it's going to take a day or two to readjust and realign portfolios. So it is going to take a little time. I figured it would be really slow yesterday. Yesterday was such a snoozer; it was ridiculous up until the last hour or so, and then by then you have an hour or so to make your trades work before you end the day. So again, another non-event. I know I sound like a broken record, but things are starting to heat up. I could see it. I'm really excited about it. We did have one negative. One thing that was really negative yesterday, and that was Apple. And Apple shares were down pretty big. I would say believe it was 6% or something. I'm not really. I don't really trade Apple, but I do follow it obviously because it's a key bellwether. And you can see here that big engulfing red candle. And they were talking about they're going to unveil the Apple iPhone on Wednesday. Highly anticipated event, obviously. And a lot of people are thinking that the Apple iPhone might be a dud, but we'll see. We'll see what happens, and I guess people are getting out prior to that risk event, which is a smart idea. But moving forward, we do have that risk event coming today on Wednesday, which is the German announcement, and then of course the Fed. So we're going to want to watch and see what happens. I think there's going to be some big market activity coming here closer to the end of the week. We do have sectors and indices at resistance, so it's going to be one of the two. They're either going to break out or they're going to start to roll over again. I think this has been a little bit long in the tooth, grinding higher on absolutely no volume. We did break out of resistance, and this is all QE3. Remember that, anticipation of QE3. This is all that it is. Otherwise, the markets would be much, much lower than that. But I want to get to the charts, and I do want to say when we get to the sentiment, that sentiment is extremely low, and I keep saying that. Complacency around the board, and it's that scares me a great deal, because when you have everybody on one side, and when it's time to get out, there's only one door, and I think you're going to have a nice little sell-off. And again, we don't know when that could take place, but just keep an open mind about things, especially if you're long. And I keep saying, buy a little insurance, for your portfolio. A lot of when I get to the put call, you'll see that there's a lot of people right now that are less hedged than what they should be. So just something to think about. We'll go over that when we get to the put call ratio. But it's just really a 5-minute chart. You could see from Friday we had that bump up on Friday, and if you could see here, Thursday the big move up on the Bernanke statement. We ran up, stayed sideways, and then then Friday sideways, and now we're back into that little zone area here. So you can see relatively quiet since Thursday. So really not much really to talk about. But let's get into. I want to show you some of these charts. And since we're at the put call, let me talk about the put call ratio here. 79 is where we close, right? Still ended up bullish. Extreme complacency, as you can see here. And what's happening is that we're if there is a shock event, some sort of a risk event, I think a lot of these longer-term investors, okay, not as much as traders, are going to be caught off guard. And what's going to happen is they're going to end up selling stocks that are in the money for any of their losses, and that's just going to create a waterfall sell-off, as well as having stops getting triggered. So this here is very nervous to me. Bullish falling wedge, still in the wedge, but you have to see we have extreme complacency here. and we do have negative seasonal tendencies approaching us, which is right about now. September, actually end of August, September, and October. Now, we did have one or two sessions that we didn't have, I think, in September that actually closed up on the month. So history doesn't have to repeat itself, but just a word of caution knowing that you're coming into a weak seasonal tendency here. Okay, so let's take a look at the Shanghai. China came out with some numbers. Again, not so stellar. They're import numbers. But we did have that big engulfing candle, and we stayed right above it yesterday night, which is fine. I mean, this is a good sign that's not taking back this engulfing candle, but still has a lot of work to do. And if you ask me, this is here is just a short covering rally, little bounce back, oversold bounce coming into this little area zone here. So really still needs a lot of work. So I wouldn't really get too excited about that. Now, I don't have it up today because really nothing has changed, but copper held up pretty well. I like copper, that it broke back up again, but it needs to get above 4 to really get something meaningful going here, okay? NYMO, nothing going on with the NYMO again. Back up to that 35.40, boom, right back to that 17.5 area. And as you can see here, we are in this little channel since mid-July, so nothing really to say other than the fact that we can move higher and or lower without being overbought or oversold. Bullish percent, 79.5, just about. Reading an overbought, so I'll keep an eye on the S&P. As you can see here, that we are still overbought, but overbought is not a sell signal. We can move, we can stay overbought for quite some time. But just again, flags. He's saying just use caution. Now, when you day trading during the day is a little different, obviously, right? We have 6.5 hours to make money on a stock, so we want to position ourselves accordingly. And if the risk is there, then just stay away. Just wait until that happens, because there's going to be plenty of opportunity this month come. And I think it's going to open up the doors for some great volatility and some great trading. And just like to be nimble, keep the palate dry, and get ready when the opportunity does arise. Instead of being long all these positions going against you, your mindset's just off. Okay, bonds. I want to talk about the bonds. Now, as I mentioned before, bond guys are always smarter than the equity guys. And as you can see here, this long-term uptrend line with this bullish falling wedge, we did break out of the wedge, and now we're back testing it. So to me, this is nothing more than just a bullish price action, normal pullback within this wedge and this upper line here. Now, if I show you the weekly chart, you can see the weekly chart holding that long-term trend line right up. And there's nothing wrong with this chart at all. So if I saw a bond starting to break this area here and maybe a back test and then start to move lower, that would entice me even more to say, wow, equities is probably ready to make another run for the 1500 area. But as of right now, that's not what it's telling me. So just, a word of caution. Okay, let's get into the equity charts. You've seen these already, guys. This is the SPY daily. And as you can see here, we just rolled back up. We broke out 2 days, and we're coming back. Now, on the bull camp, it is bullish that the markets actually roll. We did have lower volume, okay, than Friday. And then now we're taking back a little bit of these gains. Fine. If we can roll back and hold this 142.5 area and then start to move higher, that would be bullish. Basically, a nice bull flag forming, low volume pullback, and then acceleration to the upside. Now, that would actually, if you can see here, and there's a weekly chart of the S&P cash, that would be ideal for this weekly chart to break back above this 1455. So that's going to be the next area of resistance is 1455. Then obviously would be right back up here just before the crash of 2008 would be 1569. And I think that's a target, believe it or not, for the end of the year. Do I think we get there? It's absolutely possible. There's no reason why we can't get up there. Now, I'm not saying that we are going to get up there, but I'm just telling you that it's possible with the Fed intervening and providing liquidity, keeping yields low, nowhere to put your money, the wealth effect, right back into equities. I do think that we chop around, might be a choppy move to the upside. I don't think it's just a beeline right up there, but yes, I do think that we can get up there, and target would be for right around the 1500.5 area. Okay, daily chart. So you can see here we broke back out of this red area resistance, which is now support. We just broke around here, as you remember, in August, and now our momentum indicators are actually turning up again. So that's, again, a bullish sign for the equity markets. S&P 500, that's the cash. And I'd like to show you the IWMs. As you can see here, we're all at resistance. But we had some move, so now it's time to redigest and bring back everything back down to reality and then see where we go from here. Once this pullback, and we monitor the pullback and how it's determined, whether it be on low volume or on heavy volume for distribution, then we can make a good assessment on where we're going from there. But as of right now, we just had this big move up on anticipation of QE3. Draghi speaking, saying they're going to save the euro, we're going to do anything what it takes. So a lot of talk, and a lot of talk moves the markets, as you can see, but there's nothing really meaningful that has happened as of yet. Okay, so we have the transports, IYT, the ETF, and as you can see here, all we did was we just flagged right into major resistance, 20, 50, 200 day. We need to see a lot more work in this transportation sector for me to get excited. SMH really pull back here. Big engulfing candle. Now we're taking it back, and the semis actually are weak. Get into this weak seasonal tendencies right around September, October for a nice big push going into November and December. So this is to be expected. I wouldn't surprise me if they take out the low here and start to move a little bit lower. All right. Lastly, Qs. Double top still in place. As you can see, we broke back, but we came back in it again. We're testing this low. 67.45 will entice me to get short the Qs, especially with Apple weakness. If it could be a one-day wonder, but I'll be looking for that for any signs of selling tech, big cap tech. All right, Qs daily. Last one, guys. As you can see here, we came back. We took it all back. So we're just about here. 68.40 would be the low of this beginning of this large engulfing candle. Low volume, so I'm not going to read too much into it. But this week will be interesting. The next couple of days will be interesting, so please be on your toes. I talked about the coal sector, and we had a nice big reversal day yesterday. And again, to be expected. Watch the coal sector on a pullback to see if it makes a lower high. If we can make a lower high, I think you'll get a good squeeze into the coal sector going into the new year. And that's going to be one of my plays. Now, also, don't forget about the China play. China's imports were horrible. I think you're going to get a good play into that China plays for these commodity stocks to really get whacked before we rally going into the end of the year. So just keep that in mind again. I'll be looking for certain sectors as well, and I'll be posting them in the morning once we start getting some movement in the markets. Guys, have a great day. We'll talk to you tomorrow. Take care.